Risk off, not overdone. Idea Global believes that the risk off phase, which we've seen since the Fed started warning about a more balanced approach towards tapering, has not finished. The market has seen a bounce in the last 24 hours after Fed Fisher's comments and also some more slightly conciliatory comments from the People's Bank of China. However, we very much see this as just being a technical move, and the wider trend still remains for risk off. Why do we see this? Well, the Fed tapering question still remains very much on the table. The Fed will downplay the idea that they're going to look at an increase in interest rates as early as 2014, but the idea of Fed tapering will still remain very clearly on the table, even if we get a weak employment report on July the 5th. So that's a given for the market. Meanwhile, over in China, the People's Bank of China is very clear that it wants a slowdown in lending growth. If that causes a slowdown on a temporary basis in terms of GDP growth, then that's something that they'll have to live with. This changed the picture for global markets that have been used to a wave of liquidity and have been used to a buoyant Asian story. Both of these are now in jeopardy, and the market still needs to correct further, even to catch up with the poor underlying fundamentals, never mind the normal overshoot that occurs during risk-off phases. In the current environment, Idea Global feels that the riskiest sector is actually Europe, given the underlying problems, and we could very much see scope for euro-dollar to undertake a significant medium-term fall towards 122.70 by October. Short-term, our favourite trade is dollar Canada to 107 and then to 112. This is Mike Gallagher from Idea Global.